Okay, everyone, I will run through a few tickers by request. Several requests for these tickers, so I'll just do a video on them. The first one is ARKK. I want to remind you that the ARK mentality is high risk, extremely high risk, as high as it gets. What do I mean? They go to their website, their words, not mine. Big giant font, probably 80, number 80 font. You can't miss it. We solely invest in innovation and disruption. Solely is super high risk because you're putting all your eggs in one basket. Innovation is something that has bad fundamentals right now, but has super good hope in the future of success. But if the hope doesn't come, it's a complete wipeout. So they put all their eggs solely into a very risky proposition that doesn't have any fundamentals right now. That's basically what they're saying. So if you're on board with that, know that these tickers move very fast because they are frothy. Not a bad thing. It is a bad thing if you put all your trades in that basket. She got lucky with one super duper call on Tesla, so she can afford a lot of other zeros for that one hero. So that is what makes them attractive. That is what makes them very violent. So this is ARKK, one of the ETFs that they offer. 11% of it is Tesla alone. Baidu's in there, Spotify's in there. I'm drawing a blank at the Roku's in there, I believe. So good names. Those make up, the top 10 make up about half of it. And they're names you would recognize. I believe JD's in there. Maybe Tencent, I'm not sure. Maybe TME, I'm not sure. But you would know the names, and I'm okay with all of the top 10. So it is a viable trade, not so much like an EV company like that doesn't have anything now and hoping for the future. These are actually the top 10 have revenues right now. So the trouble with it, it's falling into a hard support. So on the 5th of March, the whole market collapsed. Remember, they fell like 40% when the market dropped like 10%. So they're on crack already. So that was proof that indeed they rally fast up and down. So if they bounced hard on the 5th at 106, the low was 106.25. Here they are. So if the bulls have any conviction in their stock, this is where they would defend it. And if they lose it, that means something else is unfolding. Technically, once they lost this level, to my eye, they triggered a bearish pattern. Now, officially, if they lose this level, they trigger an even bigger pattern. I don't want to scare anybody, but the downside, the technical downside of losing that is in the 70s. So this is not my scenario, and it won't go there alone. What do I mean? If the market's correct, this is where it will go, but it's not going there because of itself. So also, this is a pretty strong base for the whole rally. So here's how I would treat it. If I'm not long, this is where I would get long with a tight stop. Because if it goes below this, I don't know where it's going. It should stop here, but what if it doesn't? So if I'm long here, this is not my exit point. The exit point is below here. If I get long here, I stop myself out as soon as it gets below here. Worst case scenario, I mean, it should have support at the 100 mark, right? It's like a psychological thing. And look left, 100 plays a role many places. So tomorrow is non-farm payroll. I've spoken about it already too much. I think it has the potential to be a catastrophe for the markets or a big pop of relief. If we have bad news, the markets should breathe a sigh of relief. If we have really strong news, they should freak out. If they don't, then they will breathe. I'd be surprised. They'd be idiotic if they don't. But hey, nobody accused the market of being smart. So it's too late to panic out. It is a better long than a short here, provided they hold this bottom. Where can it go? I just told you where, and I scared the mathematics out of everybody. But those have been my points for a while. And I can look, strong consolidation zone, which means support on the way down. All right, so that's the one ticker. Everybody's looking at that one. I also had the request among many eBay. So this is not an obvious long. It has had 3 failures at 59, let's call it. So a bump above 59 could fill the gap, but know that there's resistance throughout. I do like the company long term. I did favor catching the falling knife, except I didn't find good premiums to sell. So I wouldn't get out of eBay here. If I'm long, I can enjoy it. If I'm long and profitable short term, I would book some just in case the whole market's hiccups. This is a support level. This is a support level. If it falls to here, in fact, I will do it right now. My alarm's triggered and I did not do anything about it. I'll set new ones. And here's what I'll say. If it falls to here, I'm going to say long, force myself to get long, even though I'm going to be probably pooping my pants, so to speak, because if this is going on, the whole market is having a tizzy. This is where you do your shopping. All right, I think ADI is another one as well. So not an obvious point of entry. 157.5, 158 is resistance. These are absolute places to short it with a tight stop. If they can overcome these, and the first one will be 162, then it could trigger a buy signal. So gutsy people could short it going into that number and stop themselves out. This is not an obvious point of entry for me. If they lose 148, 149, they could fall to 142, 140. That is this one. Oracle, I don't get a lot of requests for Oracle, but here it is. Ooh, definitely not a point of entry for me on Oracle. I'm surprised it's up there. In fact, it's probably shortable. So I don't know what's going on with it. If I wanted to short the markets, this would be a gazelle I'd pick on. This is, wow. What? What is happening with Oracle? Okay, so if I have longs, I would book them, even at the expense of losing out on more upside. Are you kidding me? This is flat. Debt to ratio rising, nothing improving, and the statistics is going ballistic. It's not expensive. 20 PE, 6 times sales. That's more than like almost 40% more than Amazon price to sales. So why? Amazon is like 100 times better company than this one. I don't know what's going on. If I don't know what's going on, I can't argue with it that badly. But I would book my profits. Part of booking profits is can be selling calls or buying a put or buying put spreads. So lock some profits somewhere. SONO, not a point of entry on the weekly. Falling into support because of these two bounces, so it should find buyers into 34. If it loses 34.5, maybe 34 at the worst, it could whoosh down to the 28.30, and at which point it will be a better entry point. Understand it has earnings coming up, and the reaction to the earnings is what? No. It doesn't depend on what kind of report they're gonna deliver. It does not depend on that at all. It depends on expectations, sentiment, human feelings. That's it. The report will matter long term. Short term does not matter. Look at Amazon. Amazon crushed their report and they fell 10% from here, but actually the spike was from what, 36.67, so it was bigger than 10% on the best report they've ever reported. So don't kid yourself on that one. It's tempting, but it's not the price driver. All right, so I will leave you with the SPY one more time. Just the big picture, daily chart, not to get too wonky on anybody. First of all, this tells me the bulls are in charge. So whatever dip we get is a buyable dip. This tells me that they are trying to buy the dip. Look, every daily candle has bad long tail, meaning they don't want to be down here. So that places risk down here. So if down here is lost, 410, 411, 412, then they're going for a ride to 4.5. And if close enough to 400, let's close this gap. So it's starting to look like a head and shoulders kind of a deal. So whatever bounce we get, see how far up it goes against these two past fails. I put fails in quotes because, come on, failing at these altitudes is kind of a joke almost, right? So let me draw it out here. Again, these are daily candles, nothing fancy. So if I want to draw a line here, I could. And if I draw a line here, the bears are trying to maintain control. So the battle is going from here and getting shrinking and shrinking. And then either they do this or they pop, 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 and they try to get out of here. So this candle, that one funky day, becomes a problem, which becomes the opportunity. So if I were to pick values, this is one, that is 412 versus 420. So these are two absolute values. Anything can happen in between. Take out 420, we're going to 428. Take out 412, we're probably going to fill this gap. That's it. Simple as that. There are a lot of other trigger points inside these levels, but this is for somebody who's not trading the day, intraday.